Good afternoon, everybody. This is Andy Pedraza with Special Effects Academy on the February 17th of 2019 start of the week Forex Weekly Outlook. As usual, we'll be going through our standard agenda, look at the prior week, our currency strength meter for the last 30 days, as well as the week that just ended. Fundamental announcements on our calendar for the week, a look at the major pairs on the daily charts, any setups we see in progress, and a few parting words. We'll start out with our long-term ledger. You should be seeing that on the screen right now. We had a pretty good week. In particular, the Euro New Zealand was very kind to us yet again. It's definitely been the pair that have provided the most profits for the year. We took 3 separate trades out on the Euro New Zealand this week, all of them at profit, close to 300 pips, if I'm not mistaken, in profit in total on that one pair. A few other good and bad trades throughout the week, but in general, the account is looking healthy on the long term. And we have multiple open trades that are either in a good position or definitely trending in the right direction based on anything going on geopolitically and whatnot for the long-term outlook. Our short-term trading, we had a pretty busy week, slightly negative. We were down by 43.4 pips for the short-term trades, with one trade remaining open, which may yet flip the short-term trading into positive for the week that just ended. We got one trade open at this time. Notes and opportunities for improvement. We did have a Swiss franc spike during last week's market open, so exactly 7 days ago. Market opened with a very, very significant spike on the Swiss pairs that did take us out at a loss early in the week on multiple trades. So we spent some of the week recovering from that. As I mentioned, Euro New Zealand continues to deliver steady profit, and we did enter and exit 3 shorts on this pair over the week, all of them at profit. So that was one of the highlights. And there's been a pound retracement after a really nice drop the first 3-4 days of the week. We did have some retracement happening on Friday that flipped us into the negative in some of the open pound trades. We're going to have to see how the week opens, and it has opened already. Not a whole lot of movement on the Forex pairs as yet. But we're going to have to monitor the next 24 hours to see if we can gauge some of the direction that we may be looking at for the week. And as I mentioned in the prior slide, for our short-term account, we did carry one trade. The AUDUSD short was kept open over the weekend, slightly negative right now, but still very much in play. And again, too soon to tell. The week is just open, but we'll be keeping a close eye on anything that we currently have open to see if we can get some quick profit out of it or reassess in case that's necessary. That being said, we'll jump into our look at the relative strength for the different currency pairs over the last 30 days as well as the last week. Last 30 days, volatility is slowly rising again. We crossed the 4% mark yet again for the past 30 days. It had been trending a little bit lower. These last couple of weeks have bumped it up again. We can see on the long term, the 30-day view, that the clear winners have really been the bullion, silver and gold, have been trending quite nicely. They've been going up against virtually, well, actually everything else. So they have been the clear movers for the last 30 days. This gives us a little bit of a view into the psychology of the market. Whenever we see gold and silver doing very well, you can tell that there's a lot of uncertainty in the market and people are starting to move their money out into some sort of safe haven. Gold and silver have always been that. Other than that, the Aussie and the Canadian have been going back and forth. The Swiss has been the clear loser. The Swiss have lost ground against everybody else. Euro has also, for the most, lost ground. The pound keeps going back and forth. Yen has been another clear loser. The Kiwi a clear winner, gaining ground against everybody except the metals. The dollar also back and forth, middle of the pack. And we covered bullion. For the last 7 days, volatility also slightly rising. We're at 2.42% for the week. Aussie had a, I'm not going to say a good week, but at least it didn't backslide too much. So while the Aussie did lose ground against, did gain ground against almost everybody else, it wasn't a very sharp move, very much a sideways movement. Same thing can be said for the CAD. While it did regain some of its strength against most of the other currency pairs, it didn't do so by any sort of wide margin. Swiss continues to be the clear loser for several weeks running now. Euro had some very nice movements, losing ground, especially against the Kiwi. So the Euro New Zealand, already mentioned, has been one of the best trades so far we've taken for the year. We've been in and out of that one at least some 15 times over the past couple of months. Other than that, the euro has gained ground against the pound, another trade we're in, and in general has been more sideways than not. But some of the big moves have been with the euro pairs, and that may be a little bit of a heads up as to where the euro is going. Of course, it's very vulnerable to all the Brexit stuff going on, as well as some upsets in the European banking sector have also been weighing on the euro. It hasn't dropped as much as I would have thought it would, which means it might be poised for one of those big drops. So we're keeping a close eye on the euro. Euro New Zealand, of course, will probably be continuing to trade since it has been a very good money maker. The pound in the last week, as I mentioned, also lost ground against pretty much everyone except the Swiss and the yen, and only regained a small portion of its losses on Friday, not enough to move the needle, but it did have a pretty good end of week. The yen clear loser, dropping against everybody else. Kiwi clear winner, and you can see how heavily shaded the blue is on the Kiwi column. So that one has been moving very rapidly and against everybody else. And it has been helped by movements from the other currencies. So it hasn't been the Kiwi alone, but certainly the Kiwi is moving back into strength, and we just have to see how long that's going to last. Dollar, middle of the pack, and not a whole lot of movement, pretty sideways. And the metals, while they did not have as good a week as they've had a month, were still pretty good. Gold gaining ground against everybody except the Kiwi and the Aussie. And silver, back and forth, it really only lost ground to the Kiwi. Other than that, also pretty sideways. Fundamental announcements for the week. It's a pretty light week, so we don't have a lot going on. We do have the FOMC minutes coming out of the Fed on Wednesday. That will be traded live. We already have a 2 p.m. session on Wednesday anyway, so we'll probably be opening up the trading room about 15 minutes early that day to set ourselves up for any movements thanks to these minutes being released. And in the evening, also dovetailing nicely with our evening session, are the employment numbers coming out of Australia. So the only sessions that we will be trading will be on Wednesday, and we won't have any special sessions for them because they do match our regular hours anyway. And with that, we move into the charts. I have added this week the WTI, the oil chart, simply because it's starting to get interesting, especially for the purposes of trading the Canadian dollar. As we can see from this chart, oil prices plummeted throughout the third quarter of 2018, reaching their low in December of last year when they dropped as low as 42. That is the bottom of the chart. And since then, they've been having a steady recovery that has slowed down in the last couple of weeks, starting to flatten out. But importantly, price action has crossed the Ichimoku cloud towards a bullish slant. So it's gone completely across the cloud. It hasn't moved away from the cloud area much yet. It just basically came out on Friday, and we're going to have to wait and see if that is signs of a bigger move in play, which is what I'm hoping for. I would love to see an oil recovery somewhere into the 60s, as that's going to give us some brilliant opportunities trading the Canadian dollar. More importantly, in the Ichimoku indicator, we have the Tenkan and the Kijun. Those are the red and blue lines. They're about to cross. That is not necessarily a good thing, because they are going to be crossing bearish if that cross happens. So the next couple of days are really going to tell us whether we have a bullish indicator out of the Ichimoku, or bearish, or anything in between. It could very well go sideways for a while. But it's of keen interest to me, simply because it will give me a lot of insight when it comes to trading the Canadian. So I'm adding this chart to the deck starting now. I don't know if I'll keep it forever. It depends on what ends up happening in the next few weeks. But right now, it's just gotten too interesting to ignore. And now we move into our normal charts, starting with the euro dollar. We can still see the euro dollar on the daily is moving pretty sideways and is at the bottom of its range. We were in a short trade on the euro dollar, and we got out a little bit better than break even, simply because there was a very sharp retrace throughout the week, and it just wasn't worthwhile to risk it going back up to its prior high, especially since it had already hit the bottom of the chart. I would have liked it to go deeper, and indeed I may trade this deeper yet, depending on which way it starts out the week, but it was simply too big of a risk to continue carrying that one. So for now, we're out of the euro dollar, but I am keeping a close eye on this one, as well as all the other euro pairs, to see if we get any good opportunities. Pound dollar, we had some, at least one good short on the pound dollar. We took profit out of this week that just ended, and the movement ended on Friday. As I said, the pound did a very nice reversal or retracement on Friday, almost back up to the trend line here on the pound dollar. And again, I'm not looking to assume too much risk, so we had some profit. We took it out, and I'll be keeping a close eye on the pound as the week starts. We are still short on several pound pairs, but this is not one of them. So I may re-enter this one. It's really going to depend on what's happening as the week kicks off. USDJPY, another one we exited last week. I think at break even, we had a very sharp retrace towards the end of the week that wiped out all of the gains. So we didn't lose anything on it, didn't win anything. The trend is still bullish, and this is another one that I'm going to keep a close eye on it as the week kicks off. The yen is in a very delicate position, because while the yen is moving independently of anything else, it has its ups and downs. It's also being affected by being a safe haven currency when Europe runs into uncertainty, which is exactly what's happening right now. So all things being equal, you'd think this one would start going down into yen strength. That has yet to happen. So it's in a very delicate junction here, and again, not looking to jump into any trades at this point, but on the daily chart we can see that it has crossed the Ichimoku cloud bullish, so it is still in a buy. The Tenkan Kijun, red and blue lines, are also bullish right now, and the Chico, the green line, has crossed the candles, also bullish. So everything is indicating a good opportunity to trade it up for as far as it wants to go. But I got nervous with the retracement towards the end of the week. So another one we're going to be waiting as the week kicks off to see if we get any hint of direction. USDCAD, we took some profit on this one in the past week or two. So that's been a good trade as oil prices improved and the CAD regained some strength, but that ended last week. So we're back very much towards the the upper regions of its current range. It has been hitting the bottom of the cloud, which acted nicely as resistance, but this one could go either way yet, and it's going to depend more on what oil prices do in the short term than on anything else. I'm already short on this one yet again. This was a trade we opened late on Friday. It was carrying a little bit of profit as the week ended. Right now, I think it's at break even with the market open now. But we are trying to trade it back down to its prior low around the high 130, so a little bit below 131, which is the prior low that it made. Going to be a long-term trade. That's how it's opened, and we'll be keeping an eye on that one as well. USD Swiss, as I mentioned at the start of this call, 7 days ago, we had that long spike that you can see there on your screens, about 5 candles back. That took us out of several Swiss trades. We are back in trading it in the same direction down with a much wider stop. And, well, that's meant to be a very long-term trade. So I'm not going to be updating too much on that one, other than that hopefully the current high is not going to be broken. Otherwise, something is seriously wrong with the outlook on both currencies, and I don't see much of a chance. But the USD Swiss has been very strange for quite a while, so there's no telling exactly where it's going to go. Aussie dollar, and I did take I forget if it was profitable or not, probably a small loss on the Aussie dollar short term on some of the movements throughout the week. It's still moving very sideways. No opportunities for long-term trades based on the technicals. But if I do see, and we did last week, opportunities for short-term entries, I will take them. Don't think they played out too well last week, but again, that's the luck of the draw. Not every trade is going to be a winner. So we'll be back to the Aussie dollar. Its movements are more conducive towards short-term trading than anything else. So we'll see what that brings us this week. Kiwi dollar, we can see that Kiwi strength coming back over the last week, and we did take some profit on this one as well, trading it up about half of the move we captured there in our trading before getting out on Friday with profit. It may still go higher. Indeed, I'm probably going to trade it higher. I just didn't feel like keeping this one open over the weekend. But this chart is now officially bullish. It's trying to do a test of the prior highs. It's above the Ichimoku cloud. The cloud already acted as support. And for multiple reasons, this one's a buy. Just have to look for the right entry to get back in. Aussie Canadian, also in this trade. I forget if we're in this trade or we already took profit. But we have been trading it down, and I'll likely continue trading it down as it follows that trend line. It's still above the cloud, so it's still not technically a sell, but it is probably going to produce some nice opportunities as both the Aussie and the CAD evolve. The prior low is still significantly far away, 450 pips or so. So the opportunities are really good on this pair. So it is on the top of my radar right now. Euro Swiss, very sideways. Will give opportunities short term, but definitely nothing I'd be looking at for the long term, which is more or less my focus on looking at these charts on the weekly open. I'm trying to get an idea of which pairs are sliding into the point where they become interesting. This one is definitely not one of them. Euro pound, we are long in this pair, and we're back to break even on our long-term trade. It's been moving very nicely towards the top, but as with most of the other pound pairs, Friday undid much of the good movement that the week had. You can see that last candle there on the screen. It's perfectly matches the prior one that was bullish, just in the opposite direction. So another one that we'll have to wait and see what the week brings us. Moving on to EURJPY, no change. There's been no change for over a month. Continues to hug the bottom of the sideways channel, refusing to go in, refusing to really go out. So also not something I'm too interested in right now, though that may change if we see a sharp euro movement in either direction. Euro Canadian, the euro has not been moving as much as the CAD has. The CAD has been getting stronger. We did take some nice profit, multiple profits out of this pair in the last 2 or 3 weeks, and probably we'll be getting back into it as soon as we see a good opportunity. They're going to be short-term trades. I'm not too happy with the fact that this one is not that far away from the bottom compared to the trip it's already taken. So might not have as much room to give right now, but again, more is going to depend on the movement of the euro as well as the recovery of oil prices affecting CAD, or lack of recovery also affecting the CAD. So on my radar, but looking for a good entry on a short-term trade more than any long-term trading for the time being. Pound JPY, sideways. I do expect this one to go down. We're already short on it long term. Much like the other pound pairs, it did do a nice, well, for us, a bad retracement on Friday. But the overall direction of the current movement is still bearish. I'm still looking for it to cross the cloud and take us into a decent level of profit. So that's a trade I'll be holding on to for the foreseeable future, at least until all the Brexit scenarios play out. Aussie JPY, also not interesting from a long-term perspective, much like the Euro JPY, hugging the underside of a channel, and until it moves away from it, away from that red line, it's not going to be of too much interest on the long-term side. Euro New Zealand, couldn't be happier with this one. You can see the number of red arrows there as we've been shorting and shorting and shorting and picking up profit every time it does a retrace and then jumping back in. We've written it down for the entire year. So we started on the first week of the year when we opened trading, and we haven't stopped since. It's still producing nicely. It's very close to the prior low, and my expectations have always been that it's actually going to break that low and do an extension. So we'll be trading that one again. I closed out the trade on Friday simply because I didn't want to be in it for the weekend, and I'll be jumping back in as soon as tonight when we finish this session. I'll take a look at what the Euro New Zealand is doing and see whether I want to get into our umpteenth ride to start out the week. Pound Canadian moving up for whatever reason. So we've got a trend line that has been following on its way up. It looks like a sideways movement, but it does have an upward slant. This is another one that I'm expecting a sharp correction when either oil prices kick in or Brexit kicks in, or preferably both of them. And I think I'm already short on this one and close to break even, but we have in excess of, well, actually, yeah, a little bit over 400 pips to go to the bottom. And I do want those 400 pips. So this is definitely a long-term trade. And last but not least, our pound Swiss. Much like the pound JPY, the current movement is bearish, but it hasn't moved much. It's slanting slowly but surely down. Hasn't given us a big drop, which is what I've been expecting out of all of these pairs. And indeed, Friday also had that bad for us retracement on the on price action, which matches Thursday's candle. So basically it dropped like a rock on Thursday and then staged a recovery on Friday, but it had already been hurt earlier in the week. So it's significantly off its high from last week, but still now in a very iffy place where we need to take direction from whatever the week brings us as it starts, more so than that actual trend. But in my case, I'm still bearish on it, but cautiously bearish. And we do have an open trade on this one that was triggered on Thursday's drop. So also one that's carrying a little bit of loss, not much, but it is negative right now. Setups that we see in progress as the week begins. The USD, the dollar, for me, is still in a very dodgy situation. We've got a lot of stuff happening in U.S. politics as well as the economic outlook, and we do have those FOMC minutes coming out on Wednesday. So I'll be trading the dollar. It would be silly not to. The dollar and the euro are probably the major movers in the Forex market, but I'm going to be very careful with the dollar until I get an inkling of where it might be headed in, I wouldn't say short term, but more of a medium term. See if we can establish a direction and try to trade it as far as it moves. But that's neither here nor there. Just my word of advice: be careful with the dollar trades. The euro, it's still showing weakness, and in particular, the euro New Zealand is once again leading the pack. The Kiwi had a bad week, and that was it. One bad week, and then it came back with a vengeance. So last week was really good with the Kiwi pairs, but especially the Euro New Zealand outperformed pretty much everything else. And as I said before, I'll be looking for opportunities to jump back in. Pound pairs, I've already said it. They dropped throughout the week, and then on Friday staged a very shaky recovery nonetheless. So we'll be looking for the first 24 hours of this new week to see which way it might be trending. Aussie Kiwi, the Kiwi is back in play. The Aussie is still very much sideways or weakening. So we've got divergence from the Aussie New Zealand pairs, and well, that's interesting to some degree. But more importantly, the Kiwi has been very, very much directional since the beginning of the year, whereas the Aussie hasn't. The Aussie has gone up and down. So I'd be focusing more on the Kiwi as we move along, and maybe entering Aussie trades for short-term opportunities, not so much for the longer term. And last but not least, I'm still keeping the CAD on our deck of setups, simply because oil price is continuing to move up. It's not moving as fast as I would like, but it is propping up the CAD. And it's suffering retraces every now and then, but always making those higher lows and higher highs as it moves along. It's slowing down, but still it's very much directional and rising, and the CAD is starting to reflect that. We need just a little bit more of a push for this to for the CAD pairs to go into a little bit of overdrive and stage a recovery, and those will be giving us really, really good opportunity. Just have to wait for the right moment, as it's still a little bit on the dodgy side of iffy. So that's what I'm seeing as the week kicks off. My parting words here, and I was thinking about this as I was building the deck for today's presentation. Focus on the long game. Don't lose track of the big picture. We do these sessions weekly, but that's not because we should be measuring our results every single week, or rather, we should, but not with a report card mentality. We should always be doing constructive criticism on the trades we take. We have to look at our performance. And of course, we have to perform our analysis every single week and sometimes every day. But don't take these sessions as a report card. Don't get thrilled when we have hundreds of pips of profit. Don't get sad when we lost money throughout the week. We're not doing this on a week-to-week. We have a longer-term view, and that's where we really should focus on the report card mentality, not on the weekly, not on the short term. Those serve a different purpose. And more things are won by those with patience than by those with skill. That is certainly true, and half of it is showing up. So thank you for everybody that does show up. And that said, that is the end of my open session for the week. Any comments or questions from anybody? Okay, then thank you very much, and I will see everybody tomorrow, 2 p.m., as we do our first short-term trading session of the week. Thank you very much, and have a good one.